Are you really asking what a hybrid income annuity is? Seriously? Of course you are. I mean, someone's trying to sell you a hybrid income annuity. You know, I'm not sure really what that is, but I'm going to take a pretty good guess because hybrid, typically, they're talking about indexed annuities. Oh, by the way, I'm Stan The Annuity Man, America's annuity agent. No one guy out here licensed in all 50 states. I even have my face on the t-shirt. This was the first book that I wrote, the Annuity Stanifesto, and I've written 6 other ones, 7 total that I'd love to send you for free. After this video, I'll tell you how to get them. So hang in there with me, but let's talk about hybrid income annuities, because I think what you're really asking is, tell me about indexed annuities that spit off income, that you can set up for income. Because to me, hybrid is a plant, hybrid is a mattress, hybrid's a car. Hybrid is not an annuity. Hybrid is a word that agents and advisors and the industry really, in a lot of cases, they're using to sell indexed annuities. And the word hybrid to me and you really means multiple benefits. I'm going to buy a hybrid because it does all these things, right? I had a hybrid car once that, you know, it was gas and electric, right? Multiple benefits. It was a Honda Insight, and I put like 275,000 miles on it until it just went poof. Great car, like 60 plus miles ago. It was fantastic. Anyway, I know you're saying, how'd you get in it? I'd kind of unfolded in and out. I digress. Hang in there with me. Musical interlude. When I snap my fingers, you'll see a musical interlude, and then I'll magically reappear, and we're going to talk about hybrid income annuities. Okay, so breaking it down once again, let's talk about indexed annuities, fixed indexed annuities. They're life insurance products. They're not securities. They're regulated at the state level. It takes a life insurance license to sell an indexed annuity. Not good or bad, it is what it is. But that's what the product is all about. It was put on the planet in 1995 to compete with CD returns, but that's not how it's sold. It's sold too good to be true, you know, market upside with no downside, etc. Remember, if it sounds too good to be true, it is every single time. So CD type returns is what you should expect with index annuities. Yes, some years could be better than others, but blended over time, that's kind of what you should expect to see. But I know that's not how it's sold. Now, from the income side of the indexed annuity, there's 2 ways to generate income from an indexed annuity, lifetime income. You could take the indexed annuity itself and what I call annuitize it. Annuitize means to create payments, which goes back to the immediate annuity, single premium immediate annuity days in the Roman times, annuitize. So you can always take your indexed annuity and internally annuitize it with that carrier. Another call them up and say, hey, what would be my lifetime income stream that I can get if I annuitize it, if I convert the indexed annuity, hybrid, to an immediate annuity? But that's probably not what you're talking about, right? Because you've probably been pitched what's called an income rider, which is an attached benefit to an indexed annuity that you choose to attach at the time of application. And it is a benefit that you can use for lifetime income starting at a future date. You have to understand that all lifetime income streams are based primarily on your life expectancy at the time you take the payment. So no way to time it. It's real simple. It's like Social Security. The older you are, the higher the payment. Right? Nod your head. So I'm going to grab my trusty marker. I'm going to walk to the whiteboard, stroll leisurely over there, and we're going to talk about income riders attached to indexed annuities. Okay, I digress, but I have to show you this. I'll send you these books because this is what we're talking about. Indexed Annuity Owner's Manual, Income Rider Owner's Manual. That's what we're talking about. I throw those away. There we go. Now, here we go. Here's your indexed annuity, right? And then you're going to attach to it an income rider at the time of the application. Now, a couple things you have to know about an income rider. They're not all the same. They're commodity products. So if you say, hey, Stan, what's the best income rider? I don't know. I have to quote that for you. There's tons of carriers out there that offer them. There's myriads of income riders that you can shop, but typically people are attaching them either to an indexed annuity or a variable annuity. But because you used the word hybrid, or you were interested in the word hybrid, and you weren't talking about a car or a mattress or a plant, you thought it was an annuity, then we're talking about the indexed annuity. So I'll put over here hybrid, which was the magnet that got you here. and I'm also going to put over here CD because this is what type of returns you should expect from an index annuity. But when you attach an income rider, look at it visually like this. Draw a line down a blank sheet of paper or a really beat up whiteboard. Either one works. Okay, or visually in your head. Here's your accumulation value, which is that index option strategy that Johnny Agent told you you're going to get market returns, but you're not. You're going to get CD returns. Just trust me on that, and that's what you're going to get the book for to read. But then you're going to attach an income rider to that policy. The reason I drew a line down the middle of the page is it's going to be two separate calculations. So when you get your statement from the annuity company with Stan the Annuity Man as the agent, right? Licensed in all 50 states, it's going to have the value of the accumulation value and the value of the income rider. Two separate, and they're not going to be the same. Now, typically, the income rider is going to grow by a percentage every single year until you take the payment. So let's just say you're going to defer for 10 years. So in this income rider is going to grow by 7%. I'm going to stop right there because you're salivating. You're going, 7%? That's fantastic, Stan. How do I get 7%? It's not real yield. It's monopoly money. It's a phantom account that can only be used for income to calculate your first income payment. So Jimmy Carter's not in office. You're not getting 7% yield. I understand. Calm down. I know it's disappointing, but it's reality. It's a contract. But, so it's going to grow by 7% every single year for 10 years. At 10 years, you turn on the income stream, right? The 7% goes away. Poof, magically goes away. And so it's grown by this amount, and so you base your income stream amount at the time you take the payment. Let's say you put $50,000 in here on the accumulation side, and this, let's just say this has grown to 150, just to be nice, or 100. Let's do it another way. I digress, because this is more reality. $100,000 you put in the accumulation side, okay, and this has grown after 10 years right at 200. Just because if it's 7.2, it'd be 200. So let's just say it's 200. So let's just say your accumulation value at the end of year 10, okay, is 150, and your income rider value is 200,000. You're going to choose the higher of the two, right? And ironically and magically, not ironically, it's planned, the income rider valuation typically is always higher than your accumulation value. Why? Because the annuity company wants to hold on to the money and pay you back a lifetime income stream. Nod your head if that makes sense, okay? So this is your real value. If you said, Stan, I want my money back, I want to cash out, this is the amount you get. Can you cash that out lump sum? No. Can you peel off the interest of the 7% every year? No. Can you use it to calculate your first income stream payment? Yes. That's what it's for. That's what the income benefit rider for. That's what the question was for about hybrid income annuities. That's what we're talking about here. Now, the fees for this rider come out of the accumulation value. It's typically around 1%. Don't quote me on that because they're all different, but let's just say it is. So that's what it is. Now, the interesting part about this number, if the income rider percentage growth amount is 7%, that's increasing that 1% number by 7% every year. Might have gone a little fast for that, but just understand this. The percentage that the income rider is increasing by increases typically with most of these annuities that annual fee. But the annual fee comes out of the accumulation value. Now, how does Stan the Annuity Man use an indexed annuities with income riders? This is what I do. We're using it for income benefits for later pensions when you want to turn on income stream later. Because I know to the penny what that's going to be 10 years from now. And that's a good thing. I just don't use the word hybrid because I don't have to use the word hybrid because I'm talking about contractual guarantees and I'm talking facts about annuities. I'm not polishing it up and I'm not trying to trick you. I'm just telling you the facts about how these work. So hopefully you can rewind that back and see the magic come on the board again. And you can also get my books as well. All right, it's story time. Story time. Story time, right? Here's the story. Guy calls me up and he has IRA money and wants income later. Now, what does Stan the Annuity Man do every time for income later? I quote two products because there's only two products to quote. Income riders and deferred income annuities. Now, because it's inside of an IRA, the taxation of the income stream is going to be the same for both products. It's all going to be taxed last in, first out, ordinary income stream. Actually, with an IRA, it's just going to be taxed at ordinary income levels. So we quoted both deferred income annuities and fixed index annuities with income riders, and he actually was leaning toward the deferred income annuity because it's a lot simpler to understand. But when we ran the quotes, and you own an annuity for what it will do, not what it might do, will do. Okay, I wear it. I wear the logo. You buy it for the highest contractual guarantee. In this specific situation, the income rider finished first. So that's the one he chose because you choose the highest contractual guarantee. Even though he wanted the deferred income annuity because of the simplistic side, I explained to him when you buy it for the income rider, it's pretty darn simplistic as well because you're buying that guarantee, and we knew to the penny what that guarantee would be when he turned on the income stream in the future. I know this video was life-changing for you, but I got another one. Is an index annuity fixed or variable? I've answered that, but I'll go through it a little bit more in detail and compare fixed and variable annuities. You should look at that one as well. Encourage you to contact us at stantheannuityman.com for indexed annuity quotes and to get my books. After you hit the subscribe button below as your entry fee for the books, hit that. Stan The Annuity Man YouTube channel is a juggernaut. You just have to be a part of it. Then you're gonna see, if you hit the show info down below, go down, 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 come on, producer, come down, down. Okay, there it is, show info. Click that, you'll see a drop down and there'll be a link that says, get your books or something like that. Click that link, it'll take you to a landing page, fill in your address, and we'll magically send you that book. So, appreciate you joining us. See you next time.